Good morning, Paul Georgie from Allendale. It's July 19th, Tuesday morning. Some may call it Turnaround Tuesday. We've got the grain markets up sharply here today. Corn up about 18, wheat up 18 to 20, beans 10 higher here in the overnight session. And looks like we should start the day session here in line with those numbers. It seems to be, first of all, a risk-on day by traders throughout the world. We're seeing the dollar weaker. The EU ministers are meeting, and they should have are trying to work out a solution with all the European countries here on Thursday when their leaders get together. However, there is a lot of rhetoric in the process and in positioning ahead of this meeting, concerned about will the euro be able to withstand the debt issues that they're incurring, some of the problems that seeing with debt in Spain, Italy, and of course Greece. Many of the ministers are suggesting that they have to share the lending risk with outside bankers and lenders. So that is going to continue to cause some volatility in our markets. We've also got Washington that is trying to come together on a debt ceiling increase. That is still at a stalemate as far as we know. There's talk now that some of the House members are going to try to bring to a vote a balanced budget bill here today, which is expected to be vetoed by President Obama if passed. So that is another factor that's going to cause volatility and attitude changes by investors. Now, the direct effect on the grain markets is the USDA's lowering the crop conditions report yesterday by 3% in corn, 2% in beans, which is more than what the trade was expecting. They were looking for a 1 to 2% decline in the good to excellent category in corn and soybeans, and yet crop suggests that we're in much worse condition there. The other factor that we're dealing with is the weather forecast. The looks like they've taken some heat out, reduced the ridging effect. However, the forecast doesn't have a lot of moisture in it, and limited moisture after a heat wave like this can cause just as much damage as the heat itself, just because the plant needs to be revitalized with some type of moisture. So we're going to see if the forecast can put any more rain into it here in the 10 to 15 days out. The other news is China has the Ministry of Commerce there says that their pork prices have increased last week only 0.2%, which seems like a number that you say, well, only 0.2%. Well, when you compare it to what's happened in pork prices in China over the last 7 months, they're up about 40% on the year. They're up 71% from a year ago, and making a huge impact on inflation, the inflation problems in China. So some indication there that maybe things are getting under control in China. In the U.S., this problem in China is causing some support to the hog and beef markets here this morning. The talk that, well, China, even though it's only a 2% increase, it is an increase, and therefore they're going to need to buy some pork from other places in order to curb this inflation problem that they've got. So that's supporting pork prices here. Also, the extreme heat that we're having throughout the Midwest is providing support for both beef and pork, as the hog producers are struggling to keep these hogs cool. The rate of gain is reduced, therefore weight coming to market is reduced. Cutout values were up in pork yesterday, 31 cents. In beef, we had choice up 21 cents, select down 147. Certainly giving us the indication that the two things that are happening. The producers are either getting rid of cattle early, worried about decline in prices, worrying about increased feed costs. So we're marketing cattle ahead of time, which is giving us more select quality meat, and that's causing pressure in the select category, and we're not seeing it as much in the choice. And the other thing is the cattle just aren't gaining as well. And if you're looking at cattle in a feedlot where they're in the feedlot for so many days and then marketed, they just aren't performing as well, mostly because of the extreme heat that we're seeing here across the cattle feeding areas in the southern plains and here in the Midwest in the last several weeks. So these are factors affecting beef and also affecting attitude and futures prices here, and a market that is oversold. We're seeing some strength here today. So look for, again, and we've said this for the last several days, volatility is the word of the day and the word of the week, as we expect to see very choppy markets because of the uncertainty in many areas that we're watching here that affect the commodity prices. Also want to let everybody know that I will be out speaking next week in Audubon, Iowa, and Ankeny, Iowa on Wednesday and Thursday. And then we've got a branch office up in Buffalo, North Dakota, is having a meeting next Friday afternoon. So if you can attend any of these or in those areas, give us a call, save a seat. We'll make sure that we've got room available for you. So we wish everybody a very successful trading day. If you got any questions, give us a call, or otherwise we'll talk to you tomorrow morning. Thank you. Bye-bye.